Hello, Theo traders. Today is the 28th of May, 2024, and this is Gianni DePoce. We have a shortened trading week due to the Memorial Day holiday, so we only have 4 days to trade and analyze markets. So let's go ahead and jump right into it. We're seeing some important price action. Coming into this time of year, the conventional Wall Street saying is sell in May and go away. But here we are. We have stocks consolidating near all-time highs. S&P futures hit a new all-time high last week. We saw a sell-off follow afterwards on Thursday. Bunch of hysteria coming from the bearish crowd. Friday, we snapped back. Monday, we were closed. And here on Tuesday, kind of a muted open to the week. The good news is that you are seeing tech and chips outperform, being led higher by Nvidia, which is a trade that we put on for members just a day before earnings, and it's been accelerating to the upside. But what I'm trying to say here is that consolidations near the highs of a move are considered to be bullish price action. Now, various cyclical factors do have me concerned with respect to the probability of a 15 to 25% pullback later this year. However, the path to that scenario could be a bit complicated. And what I'm trying to say is I wouldn't be surprised if stocks absolutely ripped to the upside. And instead of a sell in May and go away, it turns out to be a buy in May and stay type of situation where we have a booming stock market going into the summer, followed by a sharp pullback into fall. And ultimately, stocks probably would still finish higher on the year. So that's the situation of the scenario that I'm exploring over in my mind. But as you can see here on the NASDAQ chart, it is outperforming to the upside, which is a bullish signal. If you take a look at the semiconductor index, you are breaking out to a new high there. And Nvidia here is up about 7.8% on the day, and we're about 42 points away from our swing trade being completed. So we did take on a long position in Nvidia the day before earnings. I didn't put out the trade strategy before the day before earnings. It just triggered the day before earnings. And we have since ripped to the upside. The stock reported a 10-to-1 stock split, 600% growth in sales, and the stock is absolutely ripping to the upside. And I just don't see a situation where stocks actually drop while Nvidia is booming. Its market cap is bigger than, I believe it's Apple and Tesla combined, bigger than the entire German stock market now. This is really a market defining stock at this point. And a lot of bull markets historically are characterized by names like this. And so what we have to be careful with now when it comes to Nvidia is when it eventually does roll over, right? We can continue to play the trend. We can continue to follow the higher highs and higher lows and the breakout patterns and all that. That's all fine and great. But at some point, the stock probably will experience a 50% or a 66% pullback. It's done that before. And when it experiences that type of pullback, even a 30% pullback, chances are the market's going to follow it. And so as we are breaking out to new highs, the RSI indicator, rallying into overbought territory as well, this is nothing short of bullish. Okay. And I think this is a massive tailwind for higher equity prices, but we do have instructions for those that participated in this Nvidia trade to capture gains and step aside on a rally to 1200. So we're almost there. We're almost there. And if we look across other big tech names, Apple, decent day, Google holding near its highs. I like the price action that's circulating around. To me, that's very good for the overall market. See tech outperform, and even communications are a strong sector as well. A lot of internet related names seeing important moves. I want to jump over to the bond market because we are rolling over to the September contract today. No more June contracts that we're going to be trading here from here on out. Only a few days left in June, but you're seeing duration lead again to the downside. And again, I think that portends the probability of higher interest rates going into summer, which makes sense given the price action that we're seeing in sectors like crypto and tech. People spend more when they feel wealthier. And if people are going to spend more, that's not going to help inflation come down. I even saw an article recently where younger generations are totally giving up on the hope of home ownership and are instead spending their savings. I don't know if they realize that that's actually going to be more inflationary and make it harder to actually ever save and buy a house. So some food for thought if you're in that cohort that has kind of given up on the idea of home ownership. You just need to find a creative way to get there. That would be my thinking or advice on that, because spending more is only going to add to the inflationary problem. But anyways, I digress. And the reason I bring that up is because bond markets are trading like there is more inflation coming. You're seeing duration lead the sell off to the downside, which is cautionary. And the price action that we're seeing in the energy space today is further confirmation that we could be dealing with another round of serious inflationary pressures. Now, I don't know if this is actually going to prevent the Fed from cutting. Right now, we're looking at the first rate cut being pushed back again, perhaps to November, which is just days after the election, by the way, which I don't know if is necessarily a good sign, but that's what the markets are pricing in right now. But if we do see names in the energy space start to rip higher again, coming off of a potential important low here in the energy space, we've been in names like SM Energy, Viper Energy, I still have on the books. CNX Energy Resources, I still have on the books. Actually closed out a nice profitable trade in the natural gas fund for more than 30% on Friday. Locked that in up a little bit today, but that's good enough for me for now, especially with this asset class still being in a longer term downtrend. But I think you need to pay attention to what's happening in the energy space now. Vista Energy, another strong name. Liberty Energy, Antero Resources, a lot of names in the energy space coiling near the highs as crude oil potentially comes out of an important market low. So you're seeing tech lead now, but I don't know how much longer that might last, especially if we're going to see interest rates spike again, energy prices rally. That's usually not a good environment for tech. And interestingly, with Nvidia almost satisfying its upside price target, we could have a situation where tech just begins another period of consolidation. So food for thought there. If we jump over to the precious metal space, seeing nice bids in gold and silver. Silver trying to close at a new high. This is a tailwind for our energy names, our precious metal names like Anglo Ashanti and Agnico Eagle Mines. But even other names that we've talked about recently, like Pan American Resources up almost 7% on the day, and Alamos Gold up over 3%. So you're seeing a lot of good price action on the precious metals front as well. Take a look at cryptocurrency, seeing some selling after a pretty solid weekend, if I do say so myself. But our names like in Coinbase and MicroStrategy, more or less consolidated near the highs. I think that's pretty bullish price action. But I think we also need to pay close attention to some existing names we've had on the books for quite some time. AppLovin and these other tech names that are looking pretty strong. CrowdStrike did take another position in this. So overall, what's taking place in the stock market now does point to higher prices. And if we jump real quickly over to the dollar, you'll see it appreciating against the Japanese yen again, but it is losing ground against the euro. And I'm here to argue that in an environment where the dollar is depreciating against the euro, it's not very likely to see stocks peak. I'd rather see stocks peak in an environment where the dollar is rallying, kind of like a flight to safety trade. And as long as the dollar is selling off against the euro, which has the greatest weighting within the dollar basket, I don't think we have to worry necessarily yet about a high of significance forming for stocks, although it could happen in the coming months ahead. So overall, right now, we're still risk on, but it's not like 10 out of 10 indicators bullish. I'd say we're about 7 out of 10, with respect to various indicators pointing to the path of least resistance for stocks continuing higher, but at some point do expect a high of significance to be completed. So that takes care of what I wanted to look at with you this week. Thank you so much for watching, and I'll see you back in the TheoTrade chat room.